one of the stocks that I think has the biggest upside in the market today is Coinbase, and yet shares are down 55% from just a few months ago. That's after the crypto market has slowed down a little bit. There was a lot of hype around the presidential election and everything that would happen related to crypto. Now we've hit reality where the economy looks like it's slowing. It looks like tariffs are probably going to take a bite out of consumer spending and the amount of money people have to invest in things like cryptocurrency. So that's a big reason that Coinbase stock has dropped. But we do need to keep in mind what the long-term trends are and where the company is making money. And I think the valuation is just too good to pass up. As I'm recording late in the day on Tuesday, price to earnings multiple for Coinbase is just 17. Enterprise value to sales is under 6. Even on a forward basis, the price to earnings multiple is 20. And I think that may actually underestimate the company's earnings potential long-term. So I want to dig through why I like Coinbase and where the $1 trillion opportunity is for Coinbase. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first start with that valuation. And I'm going to go a little bit backwards from what I normally do when analyzing a stock. I like to look at the company's strategic position and fundamentals first, and then work backwards to valuation. But I think we need to set a baseline here with Coinbase and just how cheap the stock is today. $39.9 billion market cap, which you can see here, price to earnings multiple, 16.9. And look at this price to free cash flow, 15.6 right now. The other thing I want to look at here is their balance sheet, $8.5 billion worth of cash on the balance sheet and about $4.5 billion worth of debt. So net cash balance of about $4 billion. That's a pretty good financial position for the company to be in if we are going into another crypto winter, which we saw in 2022 and early in 2023. But let's also look at some metrics around the company's operations, because I think they're better than a lot of people think right now, especially with the market giving us this discount recently. The first thing to look at is the company's transaction revenue. Now you can see that transaction revenue hit a peak and a trailing 12-month basis of $6.8 billion way back in 2021. That collapsed down to $1.3 billion in 2023. Again, those are all trailing 12-month numbers, but that's now up to about $4 billion. And the more recent data shows that these numbers should be pretty consistent. This is what I look at here is the spot exchanges, and this is the market share. Trading volume is the number to look at. In the depths of the crypto winter, this trading volume on the Coinbase exchange was somewhere around $1 billion. So we're now 3 to 4 times that right now. We've seen this hit up to $10 billion in a 24-hour period when things were really hot late in 2024. So we're probably not going to have the same revenue as we had in Q4 2024, but it does look like crypto trading does continue to be pretty strong into 2025. And values, while they're down, are not down to anywhere near the depths that we saw a few years ago. Bitcoin, $77,000 as I'm recording right now. Ethereum has really struggled. That's for a variety of reasons. Solana down close to $100 per token. So the trend is definitely lower, and that could continue if a recession does ensue later this year and financial markets continue to fall. But I think things are not as dire as they appear. The other thing to look at is the growth in non-transaction revenue. This is all of the segments that the company reports. You can see in blue is stablecoin revenue. Stablecoins are going to be revenue that's generated from the USDC token. That has nearly doubled in market cap over the past year. So we should see continued revenue growth in the USDC token, now about a run rate of about $1 billion per year. That is going to continue to generate revenue, even if we see trading transactions continue to decline. Blockchain rewards, so this is things like staking, that's a pretty stable business. Interest and finance fees, custodial fees, and then other subscription and services revenue. So this is the infrastructure revenue that Coinbase is generating as they update the financial system, which is what Brian Armstrong, their CEO, often talks about. So this is the base blockchain. It's using Bitcoin. It's using cryptocurrencies and stablecoins to do things like make more efficient international transactions. That's really where the company started, was Brian Armstrong saying, you know what, it's crazy that we're making these transactions from one country to another, and it takes a week and you pay a ton of fees to actually clear those transactions. Isn't there an easier way? Read the Bitcoin paper, ultimately started Coinbase, and now that's really what the company is building. But there are a couple of things that I think work in investors' favor when it comes to Coinbase. First of all, the company has been through a lot of ups and downs in the market, has actually done a really good job managing their operating expenses. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. You can see that in this chart. The company had revenue drop significantly when the crypto market hit in 2022 and 2023. But look at that operating leverage that they have over the past couple of years, operating margins now in excess of 30%. So even if revenue declines and profitability declines, I don't think this is a company that's going to go back to significant negative free cash flow. And that's ultimately the biggest risk. And the biggest reason that they wouldn't do that is they have this solid business in the non-trading business. That's going to be much more stable than what we saw in the business previously. So then if you go back to their valuation, I think the stock is looking pretty attractive. You're getting a company with a net cash balance, about a net cash of 10% of their market cap. And the upside potential is tremendous because Coinbase only has $6.3 billion worth of revenue. But again, they're trying to update the financial system. If they're successful in doing that, the upside potential is tens of billions of dollars worth of revenue. We're talking about a company that could be taking the place of banks in a lot of financial transactions. Yes, it would be lower cost per transaction, but that could elicit more and more transactions for individuals and for institutions. So I think this is a stock that has what I look for in asymmetric potential. We know that there's at least limited downside. In any stock, the most amount of money that you can lose is the capital that you put into it. But there's a solid balance sheet backing the company and a very stable platform, particularly on that USDC stablecoin business that could be $1 trillion. That's the $1 trillion number that I think we really need to keep in mind, that stablecoins alone could be worth over $1 trillion. And that's going to make its way, the interest is going to make its way to Coinbase's income statement. On top of that, you have all the other infrastructure that they're building. So the revenue growth potential over the next decade is significant. And I think the value that we're getting for the stock is just too good to pass up right now. Doesn't mean that the stock can't go lower, but if it goes lower, that's when I would like to add even more. Started buying this in 2023 and would love to add shares again at those kind of prices if we ever get that opportunity, because I think we've seen Coinbase is a much more mature company than a lot of investors give it credit for. But let me know what you think about Coinbase today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.